Hello, I'm Paul Marriage at Tellworth Investments, and welcome to the HI European Market Neutral Monthly Update for November 2023. This was an absolutely crucial month for the fund because globally we saw people beginning to look through rates coming off and some softening inflation numbers and generally getting more positive about equities after a really glum and pretty gloomy time for equities, particularly in the UK and Europe over recent months. And therefore, we saw some pretty big index moves. The FTSE 250, the mid-cap UK index, rallying 7% in the month. FTSE 100 was up too. So for the fund to have delivered another strong positive return for the period is really pleasing because it was one of those times, and we've seen quite a few of these in the last decade or so, where crowded positioning can make or break a fund when that positioning changes and people become more positive, more negative. So sailing through that, continuing our trajectory of modest positive returns month on month is really, really pleasing. And we remain focused to continue that into the year end. So what actually happened in the portfolio? Well, one or two of our key long areas were particularly good. Travel stands out with Ryanair, EasyJet and Jet2. Travel in Europe has not recovered to pre-COVID levels. Demand is out there, and we see a pretty good outlook and growth into 24 for that sector. These shares and travel shares generally remain pretty lowly valued as well. So that's been a good place to be long and made a really good contribution during the month. In the non-life insurers, primarily Lancashire and Beazley for us, these have been quite frustrating stocks and not really rallied with the market earlier in the year. And we've had a few days where there's quite big longs. They've not really joined the party. But this month in November, they really have done with good numbers, particularly Lancashire, which had a large special dividend and a buyback and really is recycling the higher returns on an improved insurance market back to shareholders. Beazley, good numbers as well, perhaps lacking the buyback, which maybe would have kicked those on. But overall, those two made a really positive contribution as well. OSB and NatWest, which have been pains earlier in the year in the banking sector, we've been patient again there and had some good payback. As you can imagine, in a rising market, the short book, generally a bit of a headwind. Nothing major standing out there. And I think it's good that we didn't get any short squeezers. And that shows we've got quite a nice balanced fund. We're not in too many crowded positions. That was good. And we didn't get any bids. There's a lot of M&A in the UK market. And of course, M&A is great if you're long, not so good if you're short. So no M&A impacting the short book there was also good. We did indeed have some wins. Really good to be short Diageo into its Latin American profit warning and also Softcat, which has slightly disappointing numbers. And we moved on and covered both of those. So good to get some short wins there and move on in a month where short wins were generally pretty hard to find. So we go into the year end with, I guess, a slightly more positive market backdrop. We're not going all in on that market rising. We remain balanced. We remain the factor neutral approach that we've got seen us through this year pretty well so far. So very keen to work till the year end. And I don't think we suddenly think the market's got a whole lot better. I think things have improved. I think the chance of the market continuing to go up in the UK is greater than it was at the beginning of last month, if you know what I mean. The potential momentum for a bit of rallies there. And we'll make sure we do our best to keep up with that if that market changes with us for a bit longer. Still plenty of opportunities on both sides of the book for us. Thank you again for your support, and we hope you have a really enjoyable Christmas holiday. We look forward to updating you again very early in the new year.